I wish to give a short talk on technology disruption in insurance and financial advisory services. My name is Tan Kin Lian. I was the former CEO of NTUC Income. I'm now the president of the Financial Services Consumer Association, FISCA. Here are some details of my qualification as an actuary and my working experience in NTUC Income. In this talk, I will cover the following issues. Will technology disruption reduce the price of insurance to consumers? Will it lead to a loss of earnings for agents and financial advisors? Let us look at life insurance in the year 1977 when I started to run NTUC Income. Insurance products were mainly endowment and whole life policies. Insurance was sold mainly through agents. Premiums were paid by cash or check or collected by agents or collectors. Communication were mainly by ordinary postal mail. And let's look at life insurance 40 years later in 2016. Insurance companies offer a wide range of insurance products, including investment-linked policies. Insurance are sold by agents, banks, financial advisors, and through the internet. Premiums are mostly paid by credit card or bank transfers. Communications are mainly by email and social media. Now, technology disruption has already happened in many insurance processes. It has resulted in a wide range of insurance products being made available to consumers. Documentations are now through paperless, PDF, and by communication by email. It's possible for online submission of insurance applications and underwriting to be done online. We are now in the paperless environment using PDF instead of ordinary paper. Customer service has been changed vastly through technology. Premiums are collected through bank transfers and credit cards, resulting in big savings of costs. These are the technology disruption that has already happened. Now, what has not changed? Direct purchase of insurance by customers bypassing the agent represents a small proportion of total sales. Life insurance sales continue to rely on face-to-face selling by agents and bank officers. Why is this so? First, the insurance products are quite complicated and customers are not clear about what each type of policy offers. And I suspect that this complication is a deliberate marketing policy to differentiate one insurance company from another, or perhaps to make it difficult for consumers to know the difference between one product and another. Agents are well rewarded by upfront commissions that are directly in proportion to the premium that are being sold. Consumers are not given the right advice in that some key information about the product are not properly explained to consumers, because if they are, the consumers may find that the product does not represent a good deal to them. And sales are made mainly through emotions, selling on emotion rather than by rational selection of the suitable product. What is the emotion? For example, Agents will tell consumers the importance of protecting their family through life insurance and not explaining the cost of this protection to the consumers. And consumers buy the insurance because they want to protect their family. Now let's look at the success in other industries of online purchasing or direct purchasing, direct buying by consumers. The direct buying through online is successful in the sale of this kind of the following products: air tickets, e-commerce, buying of products online, buying of stocks and shares, booking of hotel rooms, and rental of cars. So these industries, direct buying through online, bypassing the selling agent, has now captured a large part of the total transactions. The key success factors in the online sales of these products are: customers are familiar with the product. For example, if you wish to buy a mobile phone, air ticket, or to book a hotel room, they know what to look out for, and they can make a choice of the product that they want without having to deal with a salesperson. And the customers make many purchases of the same product each year. For example, they will be buying several air tickets in a year or booking several hotel rooms. And customers buy a specific product and not the promise of a future service, which is in the case of insurance. So the customers buy a product and they know, they look for what they want in that product. Now, how is life insurance different? Life insurance is the delivery of a future promise. It is not a concrete product that you can use or enjoy right now. The financial standing of the insurance company is important. You do not want to put large amounts of money into a company that is not financially sound and may have collapsed sometime in the future. The life insurance products are not standardized, so you can't tell the difference between one product and another product if they are offered by different insurance companies. It depends upon the status of the buyer. Now, this is called underwriting. So you have to declare your health status, and this can be quite complicated because your health status and your other personal details are relevant for the insurance company to accept you and to issue you a policy. The coverage of the policy is subject to exclusions and limits, which means as a consumer you need to know what is the product you are buying and how does it fit your needs. So life insurance still depends upon trust. You have to trust the insurance company, and because you don't know the insurance company, you have to trust the agent who sells the policy to you and who explain what the policy is. So quite likely you know the agent and you think you can trust the agent, and the agent will give you the proper advice about the suitable insurance product. So it is largely based upon trust. Now, therefore, if the nature of life and health insurance requires an agent or advisor to guide the consumer, then the correct question is not how can we buy insurance without going through the agent. The correct question is how can insurers reduce the cost of selling insurance through the agent. Now, the challenge to this is life insurance have a vested interest in the status quo. In the current way of selling insurance, they make a lot of profit because the agents are able to sell products, life insurance policies to large numbers of people, even though the product may not be suitable and may not give value to the customers. Nevertheless, the increased sales may lead to more profit for the insurance company. The agents and the financial advisors also have a vested interest in the status quo because they are able to earn good commission. And today banks have now joined the bandwagon. They are selling insurance with the high rates of commission they can earn, and all this cost of insurance is borne by the consumer, who are usually not aware that they are paying a large part of their premium as commission and marketing expenses to all the parties involved. So there is a vested interest in the life insurers, in the agents, the financial advisors and the banks to maintain the status quo because they can earn large profit and large earnings, and all these are unfortunately paid for by the consumers who are not aware that they are paying such a large sum of money. Of course, one way that this could be changed is that one day the regulator, the government agency that regulates life insurance products, will step in to protect the consumer by setting limits on the commission that can be paid, that are paid on life insurance policies. And if these limits are set at a lower level, then the cost of the life insurance to consumers will be reduced. So the question is, will the regulator step in one day, which right now they are leaving matters to the market. So one possible change is not through technology but through regulation. But small steps are already happening in the sale of insurance through the online, through the website. We have comparison websites, we have aggregator websites, and robo-advisors. Comparison websites are websites created by third party to allow consumers to compare the insurance products offered by several insurance companies, and also make it easy for the consumer to go to that company's website and buy insurance directly from them after they have made the comparison. The aggregator websites are similar to comparison website, except that it may be possible to buy insurance through the aggregator website rather than go to the website of the specific insurance company. Robo-advisors are websites that provide advice for consumers to make their choice of insurance or investment products, and the robo-advisors are automated engines that provide the advice. The question is how good are the advice given by these automated engines? It depends. So these are the robo-advisor websites. Now here is an example of a comparison website. It's called Compare First, and it is actually being promoted by the regulator, the Monetary Authority of Singapore, with the endorsement of the CASE, Consumer Association. And in this website you can compare the premiums for different types of life insurance products, and then you can go to the website of the insurance company to make your purchase. They will also try to explain what are the differences between these products. I'm not sure how successful this website is. I've not heard of any update about the consumer's experience in the use of this website. Now GoBear is another comparison website, and they compare different types of insurance, credit cards and loans offered by different insurance companies and banks, and also they after making the comparison, the consumer can go to that website of the insurance company or of the bank and make direct purchase of the product they are interested in. And Robo-advisers is explained here. It is still in the early stage of development, and the automated engine is supposed to give advice to the consumers on the type of insurance or the type of financial product, investment product they should buy. Now, in my view, the progress on the comparison website, the aggregators and robo-advisors will take a long time to show results. The progress will be slow. Agents and financial advisors will continue to play their role in the complex process of choosing the suitable type of insurance product for consumers. But I think that technology disruption can come in a different form. The financial advisors will serve their clients by using the comparison website. This is because the clients will find the comparison website to be still quite difficult to understand the differences in the product features, and they also would find it difficult to know if they can trust the insurance company, if the insurance company are financially sound, if they have a good reputation in settlement of claims, and the consumer may also find it difficult to submit the application form that is required to underwrite their risk, because they may not know how to fill up the application, the details required for the underwriting, so they may need the help of the financial advisor. So the financial advisor will still play this role of guiding the consumer, and quite likely the financial advisor will earn a fee for their service rather than commission, the huge commission on the products that they sell. The financial advisor will earn a fee, which means the insurance company might be offering products that are cheaper because commissions do not have to be paid, or alternatively the commissions are paid to the financial advisor, who will then return it back to the consumer. But quite likely I would see that it's possible for products that are free of commission to be offered, and financial advisors to provide advice to consumers on choosing the right kind of policy, and to earn a fee paid by the consumer to the advisor for this service. And the consumer benefit by enjoying insurance products that are much cheaper, because the insurance company don't have to pay any commission to the agent or the financial advisor. So I see the technology disruption possibly to come from this form. And that's all I have to say about this talk, and I shall be available for questions. And since you are online, you can send a question to me by email to me. You can also visit my website, and also read my postings in my Facebook. Thank you for watching. Goodbye.